Welcome to Rogue Trader. Please read the disclaimer and remember that prices can go down as well as up. Time for the Corona Pick Roundup. Now, Corona Picks were stocks that I looked at in my last series of videos, which I didn't expect to be damaged by the actual lockdown period. And if there's any longer term economic damage, they'd be fairly resistant to that as well. Now, of course, GSK was the first company I looked at. And although there's a possibility that their net assets are growing massively in this split up of the company they're going to embark upon, it wasn't really possible for me to fully understand the complexity of the resulting two companies that they're going to be forming. So I had to ditch GSK. Then Frontier Developments I took a look at and thought they were excellent. I bought some of them immediately. And the shares I bought in Frontier Developments have gone up by 33%. And then that then leaves us with Avast, 888 Holdings, Pets at Home, and Gamesys. So these stocks I've looked at, and let's compare them. I didn't really like them as much as Frontier Developments, but now I need to assess them and perhaps pick one or two as the best ones. So you can see here, I've got in black how the different stocks have performed, and in cyan is how the FTSE 100's done. And you can see that Avast, 888 Holdings, and Gamesys really have behaved like Corona picks. They dive bombs with the initial drop in the FTSE, but then since then they've rebounded back. And interestingly, Pets at Home, they've behaved not like a Corona pick, but just like a normal stock. You can see that their share price has pretty much followed the path of the FTSE. Now we've had updates from them. Avast have said positive install increases, but overall their updates and their guidance for 2020 are kind of we're good, but not we're great and going amazing. In contrast, 888 Holdings and Gamesys have both had extremely encouraging news readouts in the first quarter of this year. So 888 Holdings have announced an 18% boost in revenue during the lockdown, and Gamesys a 19% revenue boost during the lockdown period. The only fly in the ointment for 888 Holdings is that their sports betting has been hurt by the Corona situation, but that is only 16% of their total revenue. Pets at Home, unfortunately, they were not able to provide full year forecasts, and that's obviously a bit of a suspicious news release. And then also they've revealed that unfortunately the lockdown period will have a negative impact on sales overall. The problem is that they're relying on the vet practices to further grow the company. And although they're open for emergencies only, the whole strategy of the company, if you go and look back at the video I made on them, relies on growth in the vets. And it just looks like the lockdown period is going to impact that in a bad way. So I've decided to take away Pets at Home from the running and then concentrate on these other three. So I've tried to put together some tools and ratios to help me work out how well priced are these different shares. Um, so Avast has got the largest market cap, 4.6 billion by far, although it has got much higher revenues, or we could say double revenues of 888 Holdings and Gamesys. And so that does actually make it look quite expensive. The market cap is all the shares in issue times the value of the shares. So it does kind of look expensive, even when you factor in the increased earnings. And when you look at the history of the share price of Avast, it has been going up a lot over a long period of time. And although their revenues were going up, if you go back and look at the video, they still seem to be more towards the end of the growth cycle, and so they kind of look also. If you look at the video, Avast, they were kind of stalling a bit with their growth. So overall, I'm not really so excited with Avast, and their price to book is 5 to 1, higher than the others. So really, I've decided that these are the ones that I'm least interested in. Now, with 888 Holdings and Gamesys, we've got an interesting contrast because 888 Holdings, it's actually the cheapest now in terms of price to earnings. It's kind of expensive for price to book, but their share price has gone down a lot in recent years. Even though if you look at the video, their performance has been fairly consistent. Um, they've got a tiny market cap of 500 million compared with Gamesys, and yet they've got similar revenues. So 888 Holdings look like a reasonable buy. Um, then Gamesys, it's really interesting because it's first of all quite impressive that their revenues have, in such a short space of time, gone to match 888 Holdings, and their market cap is actually now bigger. Um, their net income at the moment is only 8 million, but we're expecting that to 10x to 129 million next year. And so, with the story here is their price of earnings now is 70.7. So that's actually much more expensive than 888 Holdings. But next year, with the transformation that's happening, then their price to earnings will drop to only 7.5. So then there will be, at current price, a bargain compared with 888 Holdings. So it's really interesting. We've got kind of an ailing 888 Holdings, but we've got a lot of history on them. Or we've got a kind of racy Gamesys, which is gonna, the actual price we're paying is all based on the growth the next year. So to summarize, 888 Holdings are kind of a limited growth story, but they do have a solid history and little debt, whereas Gamesys are really fairly new, a kind of a real upstart company, but they have this amazing play on smartphone addiction, and but the price that we currently have factored it is factoring in 10 times growth next year. Now, in terms of the markets, 888 Holdings are kind of in an embattled place because only 30% of their customers are in the UK and everywhere else are difficult places, whereas Gamesys has 52% in the UK, and what is good is 29% in Asia, in Japan particularly. So this explains their fantastic growth. And whereas 888 Holdings are competing in the crowded male market, Gamesys is targeting female gamblers and the smartphone market. So whereas 888 Holdings are kind of embattled in having to really fight for their market share, Gamesys are exploding into new areas. So also the games, the bingo and casino, which are the hottest games, they only account for 70% of 888 Holdings, whereas they're 95% for Gamesys. So overall, Gamesys are the most attractive company by far of these two. It's just the problem of, are we happy with paying more now, and then taking the gamble essentially that next year they're going to be 10xing their net income, so that their price to earnings will basically collapse to 7.5, in which case there'll be a bargain if we buy them now. So if you take a look at the Gamesys video, we know from their recent update that this income, incredible income of 596 million, is achievable based on their most recent updates of a 19% boost in the first quarter. So the question was, will their expenditure increase by not enough to allow them to have the 127 million here, which was forecast by the analysts? So I actually, if you go to my GameSys video, you'll see how I did the calculations, back of a fag packet, very rough. But I was able to satisfy myself that these numbers were reasonable, were quite possible. So really, I'm left having to believe that they can achieve this amazing growth, which would make them kind of a reasonable buy right now. So in summary, I like GameSys Group a lot. I like 888 Holdings a bit less, and Avast a kind of third place, but I would still buy them if I thought I was getting a bargain. Now, the unfortunate truth is that we probably missed the time to be buying the Corona picks. Um, of course, the time to be buying these was back here in late March, and unfortunately, the opportunity's been missed to buy these as Corona picks. Um, now we don't know. Now we don't know if what's going to happen next. We get a V shape, we get a double bottom, or a proper recession. You know, anything could happen the rest of the year. And really, my gut feeling now is to, as much as I want to go in and buy some GameSys after having identified them as such an amazing play on smartphone addiction, really, I'm going to be cautious. I'm going to be conservative about this. And what I'll do is I won't go rushing in. I'll be glad that I bought one Corona pick and it's gone up 33%. But otherwise, it's time for me to be patient and cautious. So what I'll do is I've got here my dashboard, and I plan to I'll keep Avast 888 Holdings and GameSys in my watch list, and should the prices drop to predetermined amounts, so around 300 for Avast, around I think 110 for 888 Holdings, and 750 for GameSys, then I'll buy them. So we'll see what happens if we get like a big crash and then the Corona picks even dip down a bit. Then I'm going to be prepared to buy them. But unfortunately, I've got to accept the fact that these have gone up. So I mean, GameSys has gone up 37% since the bottom. So I've got to face the facts that I was too late with my timing, and then I'm just going to hold back. And if the markets give me a chance, then I'll be stepping in and buying some of these stocks. So it's definitely a shame that I'm too late to be buying these Corona picks based on how much they've gone up since the bottom here. But I can be happy that the one stock I did buy has up 33% already. And now what I'm going to do is I've set some buy prices for these stocks, and I will be buying them at lower prices. That's 300p for Avast, 110 for 888 Holdings, and 750 for GameSys. So that's what I'm going to do. I'm just going to be patient, not go chasing these ones, even though I really like GameSys in particular. And now this rounds up the Corona Picks selections, and my next series of videos are going to be on defensive stocks.